If I can go live just a couple minutes early and make sure that I can get my diesel engine warmed up. If you guys are in the group here, I'll take a courtesy thumbs up to let me know that the audio is fine. I do apologize for last week's fritz with regard to the power outage. So I'll take a look at the first thumbs up here if you guys have got me loud and clear. Bill, thank you so much. It's great to see you guys. I appreciate you guys. Ernest, thank you. Lydia, welcome to the group from the West Coast. Thank you if you're just getting off of work. I appreciate you guys joining this live stream. We'll give it just a moment here. I like to kick it off at around 9 o'clock. That way, folks who fit this into their busy schedules are making their way in here as appropriate, and they're not missing anything. Just another very interesting week in the stock market, paying investors back. It doesn't seem that far removed from a lot of volatility the end of last year for the remaining 3 months of the year, October, November, and December. It's come back in a fury. You know, Officer Towers has hit me up asking me what my thoughts are for Monday. I'm not very encouraged coming into this earnings. I think the reports are going to be very heavily scrutinized. I think it's going to be a tough one to hoe. We'll see how it goes. You know, when the stock market runs up like this 10% into earnings, it's somewhat concerning because it's almost assuming that things are going to be good. And it is a little concerning, but hey, I'm not one to tell. I have a very, very special live stream planned this evening. I do have a big announcement for the channel. I have not released a video on this topic, but I am going to release it during this live stream for you guys. It will be in regard to the second affiliate program that I'm taking on in the Independent Investor channel. The first one, as you guys know, is First Trade. Very satisfied with that solution. And Ernest can attest to this. I'm vetting another project that he sent over to me as well with regard to a tax solution software as well. It's tough for me because I may not work through that solution myself because I've been doing TurboTax for a long time and they're actually quite good. But as we move into tax season, I want you guys to think about, you know, getting your tax software identified with the same approach that you approach your investing, and that is, you know, there's a lot of platforms out there that offer free federal filing. Most of the platforms do charge you for the state filing form as well, but I just wanted to kind of plant that seed and let you guys know to start thinking about that, okay? And as it relates to the investing portion, you need to make sure and find yourself a software program that you're happy with. And that way, a lot of the information that won't change over time can just be recalled from year to year. It makes it that much easier to do your taxes, especially when it comes to linking your brokerage account and uploading your 1099 divs and interest. It's very, very simple to do. It's a little bit of a hassle to set up, but once you do have that set up, it's really, really easy to go and upload those automatically, whether it be your taxable account or your Roth accounts for your trades. It's very, very convenient. So just want to plant the seed for that. And I just want to thank everybody that's taken the time out of their busy schedules on a Friday to make their way into the Independent Investor channel. Some other channel news as well. I had some positive feedback come through on the portfolio video that I put out. Some of the folks were very surprised that I do that. I'm not surprised a bit. I have no problem taking on that leadership role and providing that as transparency. I don't think it's one of those things that I would ever feel comfortable with, taking people into a secret group to provide that transparency. The reason why I do that is to just demonstrate what's possible. And I know some of you guys, I've reviewed, you know, Lydia's portfolio, for example, and she's well on her way. It just takes a builder's mentality to look at your portfolio and say, you know, I'm heavy here. I want to add some growth here. And that just comes with the allocation piece on some of the experience that I'm going to talk about here when it comes to breaking down the stock market. And I've really kind of tackled an amazing topic. Finances is my favorite topic, and I'm glad to break it down. I've got a lot of people hitting me up on the channel talking about, you know, really just talking from a beginner's perspective. You know, if you were a new investor out there and you were looking to get some exposure, you know, a lot of people tend to focus on, you know, what's necessary in way of experience, which you don't have to do that when you start. Some of the best things that you can do when you start is to admit what you don't know. And I think there's a lot of people out there that have a hard time doing just that, instead of just, you know, focusing on those areas over here that we'll talk about during the course of this live stream to generate some conversation within the community. But before we get started, just a little bit of background. I always like to offer a little bit of background on the channel. It's been around since we incorporated in, we set up the LLC beginning of last year. The channel's been around for 2 years. So we were providing content for all of about a year, maybe just over a year, basically just to establish the channel. The channel's grown. People are really relating with this idea of self-directed investing, okay? I think what turns a lot of people off of self-directed investing is the prospect of doing it on your own, all right? And this is where a lot of the support and coaching and counseling can come in, where you can come onto a live stream, for example, and seek out some support. You know, maybe a little bit of encouragement. Maybe sometimes we don't always talk about stock and investing. Maybe sometimes we just talk about, you know, the mental approach to stocks and, you know, some of the things that we don't talk about very often with regard to spirituality and physical health and you know, your diet and things like that that can actually promote you being a better investor. But I think that support mechanism is very, very important. And we try to provide that support along with real solutions that you can really deploy. And for you guys that have been deploying the first trade option, I'm hearing nothing but positive feedback. As I'm exploring through the first trade platform, it's providing the exact conduit that I thought that it would for individuals seeking entrance to the stock market who want to have a little bit more control over their portfolio. But before we do get started, for you guys that don't know me and have been tuning into the channel, I sometimes allude to some of my background as a commercial fisherman on the ocean in both Alaska and out of Los Angeles. I worked all up and down the West Coast, all right? And you might be thinking, well, what does this have to do with investing? It has everything to do with my approach to investing and not getting overly emotional when I see volatility kick in and adjust back in my portfolio. You guys have to understand a fisherman's mentality is such that you head out on the ocean and you might be in the hole before you go out and start working. But the idea is you may, you know, make a set and hope to have a big catch. And if you don't have that catch, you try again. And it's kind of the same idea in investing, is you're not always going to make that set, you know, and try for that big catch, and it's going to work out perfectly the way you envision it. And I think this is why I talk about having fair expectations into the stock market. And it's a lot of where my mentality comes from, because I've been used to working very, very hard for not a lot of reward, okay? But it's those times that you do get rewarded for that make it all worthwhile, all right? And to make sure that you're doing everything that you can possibly do in your power to control your program, to give you the best strategic advantage in the stock market. And that's where we're going to talk about the tools section over here, things that we offer on the Independent Investor channel. So you guys can really data log those away and say, you know, Ryan was talking about the YouTube aspect, or man, he was talking, he offered 3 apps. I'm going to be offering 3 financial budgeting tools, some debt reduction apps. I've actually got those attached in the description of this video for you guys as well. I've already tried one of them. It's PowerPay. It's very good. And then I was turned on to one additional, Personal Capital, all free of charge, of course. And then the last one is Bankrate. So 3 very good resources. And if you didn't write those down or you can't remember, but they are in the description, the links, you can link over and throw those into your favorites for you guys, make you that much more powerful when we get over here to the tools section. So I'm looking forward to a robust discussion this evening. We are going to be laser focused on investing. And those of you who have made your way into the group seeking some coaching, for you guys that don't know, I'm not a financial planner and never planned to be. Although I'm very educated on the stock market through a lot of practical experience. Really the whole point of YouTube is to provide and foster not only a dialogue, foster a discussion on the stock market, but also to provide real solutions for you guys to research on your own and see if it may fit as a solution to what you seek. Because I think a lot of people, when they start looking at this landscape, they look at everything holistically. And I think it'll really, really help you to take a step back and say, you know what, I'm going to give myself a month. All right. I'm interested in the stock market. I'm either 20 years old or I'm 60 years old. It doesn't matter. Give yourself a month, right? Watch some catalog of videos, not just mine, but others as well. Educate yourself up on some of the resources and options out there for you, and then make a decision. I find all the time that most of the mistakes in the stock market are done out of haste. And it's the excitement of getting involved for potentially all the wrong reasons. And typically when those decisions are made out of haste, they unfortunately need to be gone back and corrected because they've been made incorrectly, and you end up being not happy about it. So I'm going to cruise through the list here. We've got a very robust crowd this evening. I'm going to make sure that I get to some of these questions here in the group, as that's going to be the primary focus. I have been offering some direct help as well for those folks that have a little bit more complex of a situation and want to just bounce some ideas off of somebody. I've been entertaining kind of on a case-by-case basis for folks to offer up those ideas to me and get my personal attention. Sometimes it gets a little bit long-winded through email, so sometimes it's a little bit easier if I just talk directly. So just know that, within reason, I have been providing that. It's been working out really, really well for some of the folks that have hit me up. So I've got Rebecca in the group here. It's one of those self-employed individuals, and I can relate to that, because as a commercial fisherman, that's exactly what I did for a many number of years. I had a lot of fun doing it. So I've got Jerry in the group here. John, who's having surgery. Good luck on that. I've already commented on that. That'll be well worth it. Very cool stuff. It's good to have you guys in here. I do have the channel creators in the group. I've only seen 2 pop in. Lydia, who's devoted every single week, popping in here, supporting the message, fostering a dialogue about awareness to investing. So I've got Lydia in the group here, and I did see Brent kick in with a financial investor who honestly is one of the biggest helps, not only in this community, but in the Facebook group as well. And I've got Ernest as well, who's an administrator as well in the Facebook group. And I don't know if he would just as soon sit back and listen to my approach this evening about kind of where we are, what we're introducing and rolling out as a new solution. The tax software will probably be a 3rd solution as well. I may just throw that out there to offer to folks, because like I said, if you get familiar with that platform, you'll want to use it year after year after year, as you'll have a lot of those accounts already connected to them. But it's good to have you guys. I thank you for spending your time coming in here as well. I always take time to call out the channel creators. If I see any more pop in the group here, Bill Schultz, honestly, he comes in every week as well. If I see him pop in, I will name him and call him out as well. I've got Ernest in the group as well. Let me cruise down here and see if I can't pick up the first question, because if I don't, I'm going to roll right into my financial piece this evening. I'm not sure how long we're going to go. I'm not sure how much that's appreciated, throwing 2-hour live streams on after the fact. I'm glad to do it, as long as we're being productive in our discussion, for sure. I've got Sam Ike here. Hello, glad to meet it to a live streaming for once. So, you know, I've already kind of done my introduction. My name is Ryan. I'm very, very open to taking questions with regard to your specific financial situation. And if nothing else, everybody's financial savvy is a little bit different. And I'm going to tell you first off and foremost, man, me or anybody else doesn't have all the answers, okay? We're going to be much more powerful as a group, because I love hearing perspectives from, I mean, I've got a couple self-employed folks here in the group, Rebecca being one of them, and then Jerry being the other one as well. You know, so a solution that's going to work for them may not be appropriate for somebody else, but the idea is to foster this dialogue of awareness and know what's out there, and kind of fine tune your program to reflect what it is that you want out of the stock market. The stock market is just that. There's only one of them, okay? But when you start to pick and choose how you want to seek your exposure to the stock market, that's where it really gets interesting. And that's also where it can get very, very difficult. And that's also where I'm going to roll out this opportunity for the second affiliate program that we're going to offer as a solution through the Independent Investor channel. I've thought long and hard about it, but we're going to offer that out. I'll probably offer that out at about minute 30. So that'll let everybody know that if they join the live stream, I don't date or time stamp these videos. They're just way too long to go through and do that, but I will offer that solution at minute 30 in the live stream. So hi, y'all. Thanks for another Friday. Ryan, no doubt you're very welcome. I just want nothing best for individuals seeking empowerment. I really do enjoy this topic, and I enjoy it from a very deep perspective, okay? I enjoy doing my own personal finance. I really do. Unfortunately, I see in many, many cases where financial illiteracy has led to other things: stress, frustration, not being able to meet ends meet, and it can really pull your quality of life down. And the more you can work really hard to get this financial piece under control, the more those other things are kind of going to settle in. It's going to allow you more latitude and freedom to pursue some of those other things in life that are a heck of a lot more important than this stuff, guys. It really is. This stuff is important to get, but trust my objective in that when I say empowered individuals, I mean that you get this stuff right and you spend less time working on it. I mean, that might seem very, very funny for a lot of people to understand, but as I've moved my portfolio to more of a passive approach and tailored the portfolio a little bit more diversified for assuming that we may incur some sort of a major washout and downturn in the stock market within the next few years, I don't know. I always think like that. Will it happen? I don't know. Okay, nobody does. All right. Is there a chance that it may not happen? Of course, right? But you always want to think, is my portfolio prepared? Am I prepared to take the portfolio into a downturn if in fact it does come to fruition, right? So you always want to think with that defensive mindset. And that's something that you can really pick up if you tune into my message, because I've been through a lot of corrections in the stock market. And if that's one of the few takeaways that I can say, it's always to be defensively prepared in your program. So it's good to hear you guys. I've got Terry Harris from New Zealand. Wow, that's awesome. I'm so glad when you pop in here. Another one of those places on my bucket list. I don't know if Virginia holds a candle to New Zealand, man. So pretty cool stuff. But glad to see you guys in the group here. I've got K97, one of my just absolutely loyal subscribers, man. Gonna be offering up. Thank you very much for that. I really appreciate the gift. That's awesome. Unnecessary, but I do thank you. Help support the channel a bit anyway. After YouTube takes their small cut as well. That's kind of funny, but I do appreciate that. Thank you for your time. But K97's always been there. Excited to hear which stocks are in your Roth and which are outside your Roth. I can offer that now. As a matter of fact, I know you were asking, and this is just as good a time. You guys know that I released my portfolio review. There was one question that came through and said that my math was wrong. I only had $200,000 disclosed. I don't do that to brag. I don't offer that to be all inclusive. My total overall portfolio, my net assets are approaching 400,000 actually for my net worth. But the section of the portfolio that I do not demonstrate through those portfolio videos are my employee sponsored accounts. So for you guys that have a 401k, that would be a similar comparison to my employee sponsored account. And for you guys, I don't know if Lydia actually has a 401k program or if she just runs her individual accounts there. But I always talk about the importance of the base there. I will offer those picks to you now, actually, if you'd like. I have this all ready to go. But when I offered that portfolio video, I do it the same way every time because I actually feel like those are the most important things. But when K97 brought that to my attention, I thought there was one thing in particular that you guys could benefit from, and that is how I mix a little bit of growth, a little bit of dividend, and a little bit of fixed, at least in the brokerage account, all right? And then in the Roth is a significant amount of dividends and a little bit of growth in each one, all right? So I'll cover the 50K in the broker, starting with I don't typically consider Google a growth stock. Facebook definitely, but they're both trading at very, very reasonable valuations. But Google and Facebook as the growth engines in the broker. So I've held those outside of the Roths. Now, Facebook is the only one that I hold in both places, okay? So I've kind of averaged down a little bit in Facebook, but the one value play that I've got is IBM, and then Starbucks as well in the brokerage. And then rounding out some international exposures, JD.com. Now that's in the taxable brokerage, okay? So the purpose of that is where I've had some surplus funds that I've wanted to put to work in the brokerage account, all right? Let me get the, so those are the stocks: Starbucks, JD.com, IBM as the one dividend aristocrat really in the group, and then Facebook and Google as well. And just a partial holding in Facebook and 40 shares of Facebook, 10 shares of Google as well. Now, the fixed equities that I have in there, I can throw these ticker symbols through: VCIT, which is an intermediate term, BLV, which is a long-term bond holding, VCLT, which is a long-term corporate bond, BSV, which is a short-term bond, VCSH, which is short-term U.S. Treasuries, and then BND, which is the total fixed. So 1, 2, 3, 4, 5, 6. In the fixed equities portfolio, they all come off of Vanguard. So if you guys are interested to go onto the Vanguard website, that rounds out the 50K of exposure there in the brokerage account, all right? And another cool thing about Merrill Edge is it actually gives, I'm pretty sure it gives you the percentage of exposure to it. Yeah, it does. So in this portfolio, I've got about half and half. It's about half fixed and half equities. All right, split across those. 6 fixed, 5 stocks. So that's what I've got there in the brokerage, which you would have never got that by me just going through the laundry list of the portfolio holdings. The next one, the list of holdings, are split between the two Roths, and I'm not going to go through those on a live stream. I can just rapid fire give you Alibaba, Amazon, American Tower REIT, Apple, Baidu, China Mobile, Citigroup, Disney, ExxonMobil, J&J, Marathon Petroleum, Medtronic, Mondelez, Northrop Grumman, Royal Dutch Shell, United Technologies, VWO, which is the Emerging Markets ETF from Vanguard, VIS, which is the Industrials Sector Spider ETF. You guys see how I'm trying to diversify the portfolio by going a little bit more passive in some of these sector spiders. That's what I was identifying throughout the course of that video. VGT, which is Infotech, that's the sector spider ETF. And then VPU, you guys know that was the first sector spider ETF. And I've enjoyed owning it so much because I can't decide which across the utility sector to buy as an individual stock. So it fits perfectly. I can allocate that money up to the 3% of sector exposure there, and I'm good. And then, of course, Blackstone Group, that's just in my Roth. And then the other Roth account, I'll just go through rapid fire. So this is way better than stock picks. These are actually picks that I actually own. And if you guys watched the portfolio breakdown, you guys know this is what's reflected in that portfolio breakdown. The other account, the other Roth, has 3M, Adobe, AIG, AT&T, Chevron, Dow DuPont, Facebook, which is a little bit bigger holding. That's 50 shares there, right? So get a little bit of growth exposure there. General Electric, right, which is the top performing stock in the S&P this year. It had nowhere to go but up, so I'm not bragging, but hopefully I'm going to be able to do. China Mobile's almost back up, and AT&T's coming back up. So that'll be my Fallen Angels video that I promised to follow up when I got them all back in the black and prove that you can wait out a stock going into a downturn. Intel, JP Morgan Chase, Kraft Heinz, which I've added to that position. That's on its way north again. Microsoft, Morgan Stanley, I actually liquidated it. It ran up quite nicely. I did actually sell that position. So just for disclosure, I have enough financials exposure there. Pepsi, Pfizer, CRM Salesforce, VDC, which is the consumer sector spider, VHT, which is the healthcare ETF. I'm stoked about that one. It's really good. VB, which is the Vanguard small cap. I own about $5 grand there. Verizon, Visa, and then a small token position in Wells Fargo as well. So you guys, it's very, very important when I do that. That was a favor actually to K97 who requested that I do that. So I'm sorry to do it rapid fire, but it's fine. If you were taking notes or you want to replay it, you certainly may. This is going to be available to you guys. But the real important takeaway is to understand why I divide that up and why it's so heavy into equities in this particular portfolio. The reason why and the sole justification why I do that is because of my 100% passive position in my my employer-sponsored retirement account. That's the only reason why I do it, and that's protected Roth as well. So it just lets you guys know. It's boring if I get on and disclose that. It's fun to disclose the stock part, but just understand that I have a whole stock portfolio that I'm building up. A passive portfolio, and that's comprised of 3 index funds. That's it. It's the S&P 500 C fund, it's the S&P 500 S fund, and it's the international stock fund. So for you guys that are, have your affiliation with the government and know what I'm talking about, I own 100% of the US stock market as well as my international exposure, and that's 100% passive. I don't strategically buy, I don't shift around, I don't do anything. I'm very, very aggressive on making sure that that portfolio is allocated exactly the way I want it, and it's funded exactly on schedule. 100%, I do not deviate from that account. So just to give you an idea of why, if you looked at that heavy portfolio and you said, wow, that's really impressive, I want to do that too, you would be missing that critical piece to how I think about approaching the stock market and seeking out my diversified base as well. So that's a long answer, K9, but I hope you appreciated that. I may come out with a video as well and cover those ETFs that I've got off of Vanguard, but I give those resources openly to you guys. It's common knowledge, just like most of the stuff is on the internet. So certainly just offer you guys can go on to the Vanguard's list of 56 ETFs or whatever they've got on there and pick out those ticker symbols and see perhaps maybe why I was seeking my exposure both on the long-term bond, intermediate, and short-term bond exposure. So hopefully that helps you guys provide a little bit more clarity on what's possible. So hello, glad to make the live stream for once. Sam, good to have you, man. If you have any questions, hit me up. Got Avi A here. Quite a rally this week. Was happy to continue fine-tuning my portfolio. Yeah, well, I'm glad I didn't take some advice to sell everything. I even had somebody come in and they were talking about questioning the bond portfolio and why I even had any exposure to that. I got to tell you guys, for me, I've been very happy through the volatility. It's been nice to have a little pillar of bonds, even though it's a small percentage of the total overall. Now I kind of understand, how that plays an important role as a counterbalance in the portfolio. I'm glad to own it. I've always wanted to have a little exposure to the bond market, and I've got it. I've got a pretty sizable little portfolio now that's working for me. And if nothing else, at least I'm outpacing inflation by just a few basis points anyway. And that's really one of the main reasons why you invest, is to not only invest, but to seek some capital appreciation for your money. So good stuff, man. I've got Larry Massa in the group here. Hello to you. It's great to have you guys. Mr. Finance Guru, I done created 3 pies on M1 and deleted them all. I'm confused on how to start. I would recommend Mr. Finance Guru speaking with Brent, who's in the group. And if Brent's listening up right now, he can put his drink down and maybe respond to that comment. Brent is the guru and understands. He's done a lot of tutorials on M1 Finance. I personally wouldn't feel comfortable helping you with that solution. It's really one of the top accounts out there. There's a lot of users on that. I would just encourage you to take your time a little bit and seek out some of those support mechanisms. I know Brent is probably going to jump on this if he hasn't already, as I'm working down the script here to get you that solution. So I'm going to leave it there and let some of the questions build up. If you guys have anything specific for me, I do these live streams to provide the transparency opportunity to come in here, throw something my way. No guarantee that I'm going to know all the answers, but certainly I can take a crack at it. But if you have anything burning for me, please throw it my way. We just hit minute 33, so I'm a little bit overdue. Before I get into this kind of nuts and bolts of tonight's live stream, I'm going to tell you this. I'm going to start focusing on investing. This is an investing channel, and I've been very, very good as we've evolved this channel on putting the focus on people who are tuning in here. And there's 58 people here, and there's not 58 people commenting, which tells me that there's people sitting back and listening intently to my message. I have a very, very devout responsibility to you folks. And if you are not invested in the stock market, I'm not trying to motivate you to do something that you're uncomfortable with. What I would charge you with is to look into the prospects of becoming more aware and familiar with an all too often confusing topic. All right. So I will throw this out there in the group. I will be coming out with a formal video announcing my my decision to become an affiliate with Betterment. All right, they're a robo-advisor. They offer a solution on the channel unlike First Trade. All right, put together, Betterment and First Trade are going to offer the exact solutions that I look for. All right, and it's going to make way more sense when I go through this exercise. There are certain talking points that I struggle with very, very specifically. And as a self-directed investor, You have to sometimes look in the mirror and say, am I doing everything right? Am I doing what I'm supposed to be doing? And I think for the most part, we absolutely are. All right. If you're a young person and you're coming to self-directed investing, the prospects are infinite. It's really quite amazing the power of looking at what money can do when it's unobstructed by the construct of traditional fees, right? And traditional fees, there's a big reason why there's been a huge outflow from mutual funds into passive investing, all right? I've spent the last probably 10 days doing a deep dive into Betterment. I kind of made the decision right away, actually, to become an affiliate with Betterment. Couple things played into my decision. Someone that I respect wholeheartedly has been doing the affiliate program through Betterment for the last 6 months, and that's Ryan Scribner. So I'll be joining that team and endorsing Betterment. Wealthfront is the other one. I've done a comparison analysis, and I think they both have very good product. But at the end of the day, the solution really for folks is not everybody wants to be a self-directed investor, all right? And for the really, really savvy investors who look at self-directed investing very, very closely, there are a few gaps in the program. There are a few things that I physically do not have the tools to, for example, rebalance the portfolio every day. I can't do that, okay? I don't have the expertise to do tax loss harvesting, all right? I'm just an everyday working guy, right? So I don't have a tax accountant or a financial planner making those recommendations to me for a high fee, all right? When we put those solutions out there, we are assuming that the self-directed piece and everybody's need is different. Some people want to be passive, some people want to be active, some people want to do both, all right? The problem with just offering the First Trade account is that First Trade really promotes that active investor side of the house. And so when people come to the independent investor channel and they're seeking a solution to say, wow, is there something out there that's low fee, that is bound by a fiduciary responsibility, that I can put my money into 100% passively and I don't have to worry about it, all right? That solution exists through Betterment. So my assessment on how it fits into the channel was that it fit perfectly, all right? So those are gonna be my two account solutions, the one on the active side, the one on the passive side. And for you guys that are wondering who the Betterment product could work for, keep in mind, it doesn't have to be somebody's exclusive go-to, all right? It still fits into my model of identifying multiple pillars of opportunity for yourself. Betterment can provide the 100% passive pillar in your portfolio, but it doesn't mean that you have to have 100% of your money in an account like Betterment, all right? It doesn't mean that. It means that you absolutely need to look at the prospect of also having that cash pillar and also the opportunity of maybe having that account that a lot of people hit me up with, and they're interested in that more active role in their account, all right? And active, what I mean is, if you want to build a dividend portfolio, that's fantastic. I mean, you can win with the good dividend aristocrats that we push through. But I always cringe a little bit when people are selling that as an exclusive way going forward to just build a dividend portfolio and nothing else, okay? Don't want to seek growth, don't want to seek diversification. In a stock portfolio, guys, you're not diversified, okay? So if you're meeting the diversification check mark in your portfolio and you're understanding how important that is, then it allows you the opportunity, like the portfolio that I just ran through for you guys this week, to be a little bit more edgy, all right, with your other accounts. And for you guys that are young, and you know, Lydia's one of them, she's young, so she's got those accounts and they're set up and there's some good growth in there. I don't want you to lose that. I don't. But for a lot of people out there that are seeking the channel out, What my fear is that they're coming to the channel and they're saying, Ryan, I hear you. It's great. I acknowledge the opportunity in self-directed investing, that it is quite frankly too big of a bridge to gap. And the real analytical constructive criticism on self-directed investing is that this allocation piece is very, very difficult. This is what we strive around all the time. Now, there are allocation tools out there that you can go into and strive to build your portfolio towards, all right? But once you get that built and perfect, is it rebalancing according to your goals? No, it's not. You're basically always trying to be reactive on meeting the proper allocation based on your age and then the risk tolerance as well. And these are topics that I drive home. There's a reason why I focus on these topics right here, because they're very, very difficult to assess. And unless I have the opportunity of running you through the exercise of asking you specifically what your financial goals are, right, then you're having to do it for yourself. And I really feel like there are people out there who are going to say, Ryan, I get it. I respect your decision to go with Betterment. And that's really the expected response that I want from my subscribers, is that I get that you are doing it, but it's not for me. And that's totally fine. It's totally fine. But I just felt like the solutions that we were offering only covered about half of the spectrum, right? To be fair. And I think there were a lot of people who were coming in and saying, what about rebalancing the portfolio, Ryan? I mean, if you own 3 ETFs in a self-directed account, I think the risks can definitely outweigh the rewards down the line, because that's such a low expense account. The expense on that is super, super low. And the root of the independent investor channel, when I came out with it, was to combat the common or average 3% fee in a managed account, right? Betterment will run 25 basis points, so 0.25 of expense. And there are some thresholds there that I'm going to talk about in more detail on the rollout as the account grows, all right? That expense has the potential to grow as well, which is why we're going to define complete transparency on the opportunity. I don't just come out here and say, you have to do this. It's the best thing out there. It's the best thing since sliced bread. Ernest can attest to the fact that I do a lot of behind the scenes research before I put a product out there. I did it for a month before I went out and said First Trade was a great fit for the channel. I feel the same way about Betterment. So you guys that have heard some negative things about Betterment, it's typically from people who are not passive investors, who are trying to exploit what benefits Betterment was built for and the client that it was built for, and they're just not that type of client, okay? So you have to really, really understand, and Betterment allows you to go through this process and identify these things through, and once you're done with the exercise, they have the ability to take, I think they've got 101 or 102 different portfolio solutions, and they'll take the answers that you give through your cross-examination, which is very, very important. The financial assessment is very, very important. And they'll take that data, they'll run you through the exercise, and then they'll match you up and mirror you with that perfect portfolio. And once you're off and running, it's done. All right. So for a lot of you guys, and if I didn't have my employee sponsored passive portfolio, I would be doing this. All right. But the rules of the affiliate program are such that I cannot participate with a Betterment account. There's no need for me to do so. I already have that solution in my life, but I really, really am very, very keen and savvy and aggressive on identifying certain solutions on the channel that we can offer to somebody that comes in and says, again, I get it, Ryan. It's just a little bit too much for me to bridge. And I can acknowledge that it's not for everybody. It's not. With that said, it doesn't mean that if you're starting a passive pillar in the portfolio, that you can't start that from zero. Enjoy the low fee. Now, there's other referral incentives, etc. You can get the fees waived if you do certain referrals through the program. It's very robust. The affiliate program is actually significantly more beneficial for me personally. I will give you the statistics. You guys will be interested to know that the first trade option has brought 217 people to the platform. I have been paid on 3. All right. So for you guys that think that I'm doing this for the money or the financial aspect of it, you guys can drop that right now. Would I love to make hundreds of thousands of dollars through an affiliate program? Certainly. Sure, I'll take it, right? But those are the real numbers. Those are the facts, because their affiliate program is very strict in that there's 3 checkboxes that have to be made before I get paid my $50 affiliate. So I've absolutely earned that $150 by not only the research, but also offering it to you guys as a solution to my channel, because I believe that you guys trust me, and you should. You really should. And I value more the solution for individuals who are looking to be an active investor. I feel the exact same way about Betterment, who can do their own research and look at the benefits there. If somebody's got $5,000 or $6,000, there's a lot of volatility going on right here. So this tax loss harvesting, that would have been big the end of December last year when the stock prices were recessed, and you had that opportunity to move out of some of those, take the capital loss on it, which would have offset some of the capital gains that would have been assessed as well. And then they can rebuy similar in the same sector, not the same stock, to gravitate toward and take advantage of this tax loss or tax loss harvesting is what it's referred to. So very, very interesting. I personally don't have the expertise to look at my account and say it'll be beneficial in this taxable account to do some tax loss harvesting. Betterment does that for you as part of the service. And then finally, the rebalancing, which is huge. It's really, really big to have that always being looked at, always being adjusted. And quite frankly, it's being professionally managed for you with a fee structure that I can accept. If it's something that you look at and it's something that you can't accept, then so be it. At least we're putting the solution out there for you guys. So please stand by for that. In about a week's time, I'll be doing a deep dive into Betterment and rolling out that opportunity for affiliate through the program. And I do thank you guys for your understanding. That's the first time I've announced it on the channel, but that is happening, and I'm very, very excited for that opportunity. So the reason why I kind of came out with this here is so many people get turned off of investing by not being fair to themselves and understanding what it is about investing that really takes no experience at all. Okay, somebody can go out and put the S&P 500 into a self-directed account over here, and so by using one of the tools that we have, entering into a passive investment vehicle and not touch it for the rest of their life. The question rhetorically that I ask to you is, what experience is necessary to succeed on a program like that? I would contend very little, honestly. That's some of the best advice. If you were looking at, the S&P 500 and people hit me up with this all the time, shouldn't I own some small cap? Yes, the S&P 500 represents 81% of the large cap stock market. The other 81% will be comprised in the VB, which is the small cap. So if you own both of them, you own 100%. Now, if you own VTI, it takes and lumped in all of the market caps from above 1 billion market capitalization for your small cap stuff, all your mid cap stuff, and all of your large cap stocks all into one. That's the VTI, right? So when I talk about being a passive investor, if you're new to the stock market and you're tuning into the channel and you're like, wow, what is this guy talking about? You mean to tell me that I don't need any experience whatsoever to experience the stock market? Yeah, you can. And your in is ETF investing. I've already mentioned the outflows out of the old mutual funds and into ETFs. All right. ETFs are just a low cost alternative to a product that matches the broader market. For example, this being the S&P 500, right? So you can buy your VOO in a tax protected and wealth preserved account, and you don't have to do a thing. Nothing, zero. If you don't even have to fund it if you don't want to, all right? And the quicker you can do this earlier on in your life, the quicker you're going to identify with the benefits of that very decision. But I think you need to be very, very, very cautious in saying, I can't do this, when in fact, I'm telling you that there's certain things in the stock market that you need no experience, all right? You got to give yourself that fighter's try, all right? Give yourself that opportunity to run with some of that curiosity that you might have about investing and the prospects that exist therein, all right? Very, very important. All right. Continuing on in the no experience category, I think there's a lot of people out there that have an absolutely amazing potential in the stock market. And I think that's a lot of what we deliver in an intangible benefit when you guys come to me in the channel and say, wow, this guy's really passionate about stock market. Why? And then you watch my portfolio, and that's indicative of me making my financial goals come true. You know, with every dollar of accumulated value, with every dividend that I am paid, with every single minute that goes by where my money is working for me and I'm not working for my money, my financial goals are being met, right? So very, very important. But I think a lot of what you can get from the Independent Investor channel from a coaching and a mentoring perspective is the fact that you can tune in and say, geez, man, I have potential to do a lot of things in my life. I can do this too. And there's a lot of really, really good folks out there who do really, really great things, who would make phenomenal investors. Phenomenal, but they just haven't given themselves that chance because it's never entered into their mind. And it's amazing how many people I talk to who fall into this category. I don't have any time. I don't have any desire. I don't have any expertise. It's too tough for me. And they set up a few barriers to justify why, in fact, they don't ever question why, in fact, they cannot do that, right? Potential. So something that we can kind of give you without any experience at all. And some of those folks that, you know, tune into the channel and they're like, wow, this guy's a very successful investor, which I am. And the degree of my success is defined based on what I have in invested capital, based on the amount of earnings that I make per year, right? So the relatable portion of this dialogue is that you guys can look at it and say, geez, I make more than Ryan does. And I want you to. I do. Like, I want you to look at it and say, good grief, man, I make $100 grand or I make $80,000. How the heck does Ryan do this on a blue collar salary, right? I don't put those out there, you know, for any other reason than to provoke thought. That's it. It's the only reason why I do it. I want you to look at the program and say, where does this passion come from? Where does this desire come from? You know, I want to have that too, you know, and I want that for you. Okay. But you're the only one that can really realize this potential here. Habits is another one that doesn't require experience. And I know a lot of people that deploy very, very good budgeting habits. I mean, I know some folks that are much more aggressive. They've got the spreadsheets out, the household budget down to the penny. And I applaud you. I am not one of those people. I wish I could be, but I am not. I do not have the time nor the desire. I don't even like the word budget, okay? And I love finances, okay? I understand how important it is, but a lot of you folks are already doing this through your good habit forming behavior. And you guys, again, could get into the stock market and just absolutely kill it because you think pragmatically. You're very, very careful and calculated with your maneuvers. And if you look at, once we get over to the tools side of the house, you're going to realize that all the answers that you seek are right there. It's not like you have to engage in a college course level of study to get these answers. This is very, very elementary, in my opinion. It's very elementary. That's why I profess that anybody can get this. They really can. And then finally, the drive. Really, this is one thing that I can provide for you. If you had never considered investing in the stock market and you come across my channel for a long time, I've had a lot of people hit me up, and the best payment that I could ever get on the channel is when somebody says, Ryan, you turned me on to investing. And I gotta say this. It's amazing. I watched Scribner's video with Dan Locke. Really cool. And the part that I picked up on was that Dan talked about when his mentor took him under his wing and provided some sort of tutelage or some sort of guidance as well. That, in much lesser of a form, is what I would love to provide for you guys. Absolutely. If I've encouraged you to do this, as long as you do it right and you're seeking out and more importantly, experiencing the success in the stock market, then absolutely, I will take some credit for fostering some of that drive in you guys to pursue some of your financial goals, whatever it is that you define for yourself. And everybody needs that level of coaching and mentoring, man. If you look back and say, wow, I would have never, ever been introduced to these solutions. I didn't know. Ryan talks about multiple pillars. I always thought it was just a big pile of money, you know, or I always thought it was just a big basket of stocks, or I always just thought it was maybe even more specific, a group of equities versus bonds, right? He talks about it so much more simple than that. Cash, investments, bonds, equities, right? So very, very interesting to think about those. Now, on the investing portion, the Independent Investor channel, we revolve around the question and talk about how we can fill up our circle with certain products, right? And that's the part over here that we're going to talk about when we get over here to the experience necessary in the stock market. I don't want to scare you off, but I don't want to tell you that certain things are going to take a little bit of time. But I think a lot of people dismiss the opportunity to invest in the stock market because of certain things over here that do require some experience, if in fact you want to succeed as a self-directed investor, right? This is another portion. I've got some of the vocabulary. It's like speaking a different language. I get it. And we have some articles that flow into the group that really get into some awesome technicals, awesome stuff, man. Literally, there was a post in there about the PEG ratio, which I hadn't reviewed for a long time. I reviewed it again. I looked at a few stocks. I picked out Daimler Chrysler from a PEG ratio. And those are just connecting the dots a little bit to understand and say, God, you know what? I'm tired of seeing this PE ratio come up, which isn't really that important as far as I'm concerned. You have to compare it to other things to understand PE. But the PEG, when you're talking about a specific stock, it's the forecasted growth prospects of a particular stock that makes it singular to that specific product. For example, if you have a PE of 15 and a forecasted earnings growth of 15, right, the PEG ratio is going to be 1. All right, very simple. And then you look at a PEG ratio less than 1 as being much more affordable, or that's when they say that a stock is inexpensive, the lower below 1 that it gets in a good quality stock. Conversely, if it's much over 1, right, that's when you start to get into the stock being a little bit more expensive. And it's all figured by understanding the PEG ratio. That's a little bit more advanced than just introducing yourself to some of the general vocabulary and being able to, off the cuff, if I were sitting across from you and saying, hey, give me 30 seconds about what Apple Computer does. What is a stock? What does it mean to own company A shares in Apple Computers? What does it mean? It's partial ownership of the company's liabilities and debt obligations, right? Future earnings, future debt obligations, things like that. It's a partial ownership in the company. You're legally bound to that. Start to work through some of these definitions. What is an exchange traded fund? What are some of the benefits of an ETF compared to an index fund, right? And so you kind of work down this list here. Index funds traded after hours. They've kind of supplemented and taken the place, in my opinion, of mutual funds, a much lower cost alternative. And quite frankly, it's a dual benefit in that I don't want to pay somebody a mutual fund that's being managed. I don't want to do it. 96% fail to meet the benchmark. So why pursue that avenue? And there, you know, Dave Ramsey takes a different approach to it. I just disagree with that approach altogether. Mutual funds are a thing of the past. You don't need them to succeed in the stock market. You might as well take your chances with a low-cost product like an ETF or an index fund nowadays. Mirror the market, match the market as closely as you can, right? Don't try to outpace the market and pay an exuberant fee to do so, right? Very important. And then some of these other terms, dollar cost averaging, dividend reinvestment, diversification, compounding interest, things that we offer through the channel. And sometimes I can formulate a whole video based on just some of this vocabulary, because I do understand, man. There's words that I hear all the time. EBITDA was another one that you term that I was like, what does that mean? So I went in and checked it out, and that comes with time. It really does. It kind of fits into the experience category. But I'm going to talk about the follow-on 2 categories, man. I do want to jump back into the group here and make sure that you guys haven't shut the channel off by now with my rant about the no experience piece. But this is very, very important to understand. I want each and every person who subscribes to the channel to make sure that they have an opportunity, man. It is a path and a road that's laid right in front of them. I can't walk it for you, okay? What I can do is I can certainly hold your hand for a while until you can walk it on your own. Absolutely. And I think everybody can really appreciate that. I think there's probably somebody in each and every one of our lives that at some point has encouraged us to do something that we would have never done before had we not had that encouragement along the way. So very important stuff. So let me get back to the group here and see. I want to make sure that I haven't missed anything. I hope Brent actually got in there and helped Mr. Finance Guru as well. But a lot of overhead resistance to stay agile. Yeah, the charts are not good I think we're in a downtrend. I think this 10% has been a relief, certainly. Trend is your friend. I never bother trying to fight it. If surfing has taught me anything, it's to go with the flow. No doubt about it. I mean, therein lies the value of passive investing, certainly. I don't have anybody coming onto the channel telling me I need to sell everything, that's for sure. And my stock portfolio really hasn't changed that much. I mean, I could have panicked myself out of the stock market, and then I could have done a portfolio review of, I don't know, $100,000. I don't know. I don't invest that way, right, wrong, or indifferent, man. My portfolio structure, if you guys get nothing else, it just makes sense for me. And I'm very holistic with why I have what I have. Why do I have my portfolio so heavily in equities? I've explained that, right? And hopefully it makes sense to you guys as to why I'm doing what I'm doing. So we've got a really robust group. Actually, we're going up. We're cruising up. Hopefully we can get to 100 tonight. That'd be cool. I think we're at 99 last week when the power shut off and I had a power failure. But I think M1 are a blessing and a curse. Blessing once you know the direction you want to go. A curse because it almost feels like a game and allows you to tinker too much. Yeah. Gosh, you touch on a couple things there. I think if you're going to do M1, hopefully Brent will agree with me on this. I think it's more tailored toward a passive investing approach as well. I don't want to see you tinkering. Hell, they only buy the stock once a day. I mean, that in and of itself is enough to, if you want to invest in the good quality assets and stocks that we talk about as potential investment options for you, then put them in there and leave them. You don't need to be trading in and out of M1 finance. The platform is not built for that. And I think Brent would agree with me on that. I don't want to overspeak my bounds. I was only with them for a month, and I already had a passive base, so I didn't need M1 finance. I had a little bit different objective for that little bit of money that I had put in there. Yeah, no, I agree. If you want an active account, there's a solution for you. And it's just to understand how you align your different tools with what you actually need when you deploy your money into the stock market. And remember, your account is just an account, okay? Your account is not going to generate money for you, all right? It's just your access plug, and that's it, all right? So many people want to, oh my God, I'm not happy with this account, but what do I do? I've been with them for, oh my gosh, 4 months. I'm like, dump them. If you don't like them, dump them. I don't care. I've been with Merrill Edge, Bank of America since 2004. If they do me awry, guess what? I'll slam the door in their face and I'll move to somebody else. I have zero loyalty, zero. I will speak good about them because I'm a happy customer, and to earn my business is very tough, and you should have the same high standards as well. If there's something that doesn't fit well with you, explore another option until you find it. I think I've been with 4 brokerage accounts, right, in my time. Edward Jones, Citigroup, Smith Barney at the time, Thrivent Financial, and one additional, I can't remember. And Merrill Edge, of course. But and now I'm with First Trade. I was with M1. So I've been all over the place. I have no loyalty to anybody as far as that concerned. It's annoying. It's nice to get that decision and be with somebody that you like. I think Lydia's pretty happy. I don't think I've heard any negative comeback on either M1 or Robinhood she's with. So if it works for you and you're happy and they're providing a solution to you at a low cost, wonderful. Move on with your life. That's great. But if you're not, there are certain things that you can do to kind of fix that. That's very important. You've come to the right group, Mr. Guru. Where's Mr. Guru? I think I need to talk to Mr. Guru. Very cool. Like to address everybody who comes into the community, man, and especially leaving a comment. So I still like M1. Good. I mean, that's good. It's still one of those accounts that I recommend. It's not one of those things that I'm going to come on to YouTube and tell you if I liked the account, I would tell you. If I don't, I'm going to tell you I don't. It's that simple. All right. My ETS was also in my independent stock. I chose right on. Well, vice versa. Is there a minimum for First Trade or Roth IRA starting amount? No, there's no minimums to start, which is a little benefit. I don't know if it makes a whole lot of difference between M1. I know Brent is in the, now I see Brent in the group. That's the first time I've seen his icon there. But I'm pretty certain that there's a little minimum in M1. I think it's $500, maybe $300. I don't want to misstep, so if somebody can throw it in the group for anybody that's interested in my my comeback on that, I'm pretty sure it's 500 minimum there. There is no minimum in First Trade, which is a good thing. That's fine. Betterment has no minimum as well, which is also a great thing. You can start the account with $5. It's pretty amazing. And the commission schedule is pretty impressive. When I looked at it, like I told you guys, for all those referrals that have come over to First Trade, again, I'm very glad to provide that. I started the account myself, so it's very good. Free trades, guys. That's lingo that we would have never, ever discussed, 10 years ago. Never. It didn't exist. And now the industry is kind of moving that direction. And I know you guys are happy with First Trade. It's a very simple platform that offers free trades. There's no minimums in the account. There's free ETFs. Very, very good stuff, man. It's a really cool account. But Betterment provides that as well. So you can actually start that passive, $100. I mean, good grief. If you started it and you liked it, I've had a few folks start the account, monitor it, and they were down 10%, whatever, 15%. If you guys haven't learned anything in the stock market, you'll never, ever buy stock in any shape or form and have it go up right away, okay? And what did I say about the Betterment option? It's 100% passive, 100%. There's no cash, there's no stock. It's a perfect portfolio. And I do say that because it's perfect. As close as we can get to self-directed is the way I explained the mechanical and rudimentary approach to looking at an allocation tool and pushing our percentages up to that amount until we meet that allocation. And then we move away from it and it gets out of whack again. And it needs not only rebalancing, but it needs a reallocation. Okay, those two go hand in hand. All right. Betterment ensures through the rebalance that you're basically perfect all the time. So the question becomes, do you want to set up your pillar, your passive pillar, in your self-directed with your stock on top of it, which is a viable option, or set up your 401k with your active account on top of that, your self-directed Roth? You could do that. Or you could use Betterment to provide you that passive option. And I think that's a solution that we've failed to really identify on the channel. And it was brought to me. I looked at it objectively, and I thought this is a no-brainer. I had zero reservations. Some of the criticisms even that I've gone through and reviewed online, some other channels did review on the platform as well, and I think some of the criticism are somewhat unfounded as well. Because here's the thing, you can't just look at it and say, okay, X amount of, and I've given you guys the tools to look at the fee and expense, what it's going to cost you over, let's say, the longer term, okay? But if you're in your 40s or 50s, for example, and you start a Betterment account, how much honestly are they really getting from you over, the course of a 10 or 20-year cycle? Where it really gets interesting is when somebody that's 20 years old, for example, starts a Betterment account, invests for 40 years, right? And you look at just the expense effect in that account over time, it's alarming. I've already done those figures for you guys. That's why I came out with the channel, okay? If we were completely 100% acceptive of fees, right, then we would have never come out with the independent investor channel. However, 25 basis points of fees means that you're going to pay over time an expense, but you're not comparing it to the benefit of this, and this, the tax loss harvesting and the rebalancing and spending that 40-year time horizon owning a perfect portfolio. Honestly, it's perfect. It's built exactly in context with the financial assessment that you'll get. It just makes sense. It just makes sense. So appreciate you guys making your way into the group, man. I'm obviously on a roll this evening, feeling very, very good. It's been some validation over the last week. I think the stock market went up every day except today, but I'll take today. That was fine. But really good to have you guys in the group, man. I'll get to the second half of this exercise here after I make sure that I have all of my questions answered. So somebody validated the 500 for the M1. That's reasonable. Honestly, I don't see a whole heck of a lot of benefit to starting a Roth IRA account with zero, but it's a cool entry to be able to start the account with very little. I think it's cool, but thank you for that validation. I appreciate. Let's see. Evening all. I've got Mr. Tim Cooper in the group here. Greetings to you. Hope everything is great for you. I hope you're starting out your 2019 with a bang. I've got Gwendolyn Sunrise in the group here. Hello to you. Very cool to have you. Appreciate your time. Hope you get something out of the message tonight, man. That's really the only payment that I ever expect is you guys tuning in and learning and evolving in the stock market. I believe there isn't a minimum. No, there isn't. Thank you, Ernesto. I agree. Becky's in the group here. As I'm scrolling down, don't see a whole lot of financial questions in the group here. You guys must have this thing all dialed in and ready to go. I will give a formal shout out to the financial investor who is in the group here. Hey, dropping by to say hello, but heading to a real estate meetup. Awesome. Keep killing it, man. I wish you all the best. So he's out of the group right now. So, but you guys can certainly kick over, tune into his channel as well. And then I think Lydia's got a firsthand exposure as well to the M1. So, I mean, just it's collaboration, guys. Like, I'm not going to have all the answers, but the beauty of it is, as a community, man, we can kind of come together. And certainly the Facebook group has generated a lot of answers to a lot of complex questions out there. And it can get seedy. Trust me, finances can get very seedy. But we found some solutions on there, and the power of the internet, man, the answers are out there. There really is. Added one additional administrator to the group. His name is Lee. I will not use his last name. But for you guys that are not part of the Facebook group, Lee has been a great addition to the group, helping out just I don't know, 10 times smarter than me, no doubt about it. I'm humbled to be around those guys, Ernest and Adolfo and Lee as well, and the other admins in the group there as well. Just appreciate your guys' efforts, certainly. But if you want have a more advanced or a complex answer, you can certainly kick over there, and we don't discriminate, man. We let everybody in the group. It is a closed group for a reason, and if you act the fool, we'll kick you out. It's that simple. We've already done so to a couple fools who can go on and do their own thing. They don't need to bother us. But everybody's welcome to come on there and consume the content free of charge. It's good stuff, real good. So Larry Massa says VTI. I don't know what that's about. That's going to be the video that I'm going to do for if I had one choice, one ETF to buy, it would be VTI. This is an easy question. So very good stuff. Mr. Finance Guru says, can I roll over my Roth IRA from Wells Fargo? God, Wells Fargo's high fees, man. No doubt about it. You really need to answer those questions. I do it almost daily, where people are like, I'm with this person and I'm really happy. Oh yeah, what do you get? A few mutual funds? Yeah, okay. Well, you're paying through the nose. What? And they have no idea, you know. And my thing isn't to pick fun, man. But if you're paying through the nose, man, it's just. I mean, I'll be the bad guy. I'll be the bearer of bad news. But somebody did it for me at some point. And says, God, Brian, have you looked at this? You know what you're paying? And it's eye-opening, man. I want nothing more than anybody that finds their way to the channel. And if I'm speaking to one or two people tonight that don't know that question, the answer to that question, find it. Find it. It'll be life-changing, certainly, and definitely fixable. One of those things that absolutely deserves your attention, man, for sure. Good stuff. Can I roll over my Roth IRA from Wells but choose my own stocks to replace the ones that they were investing in? You can't do it. It has to go in sequence. You can actually roll the stocks over. It's called a like-in-kind transfer. You can do that. But then once it's in there, or you can liquidate it and just transfer the money. You can do whatever you'd like. If I'm understanding your question correctly, as long as the Roth is rolled to another Roth, that's exactly what I've done before. It's very simple. It's kind of a pain. There's a little bit of paperwork involved. You got to fax it back to them. Inquire with the receiving brokerage house, obviously. And the sending brokerage house to make sure that connection is made, making sure that the authorizations are in place before you affix that. But those are your options. If I'm understanding your question, there would be no reason to either to liquidate them if you weren't interested in keeping the position, sending the money over, or doing a like-in-kind transfer and doing it on the back end. You can do that as well. So good question. If I understood you, Ernest, I see you below say no, you can't. I'm not sure if you're referring to that or if I misunderstood the question, but that's something that I've done many times. So, if you want to be safe and invest in an index, yes. Mr. Finance, if you want to safely invest in the index. Yeah, there's all my questions. Good grief. Now, this is why I end up going for 2 hours every Friday. It's because I get to the bottom and I think that we're all done with the live stream, and then I've got like a million questions pop in here. So let me cruise back up to the top again. I don't know why YouTube does this, man. It's crazy. Yeah, I got Joseph in the house, man. Looking forward to talking to you, brother. No doubt. And we're going to have some fun. No doubt. I love finances. I love helping you. You'll get off that phone call and you'll feel better about your direction. Sometimes that's what it takes, actually, is a little bit of validation in what you're doing. I'm glad to see you in the group here. Thanks for making your way in. Good stuff. I'm hearing first trade isn't all that. I think Betterment is an awesome platform. Cool. So look, we offer these solutions. Again, I've said many times, no portfolio is the same. Here's the thing. I'm old school, baby. Okay. If you were to have told me 25 years ago that I could invest in the stock market and trade for free, I'm all about it. Okay. First Trade offers just that. If you don't like the aesthetics of the program and that's enough to turn you off of that platform, great. You can search out something else. The idea here is that we're educating ourselves up on the options. That's it. But I'm telling you what, man, free investing is a big deal. I've paid upwards of $50 for a trade. I paid $350 to exit. That was the most I've ever paid in a trading fee. That was with Edward Jones. Man, that was their thing. It was crazy. Yeah, it just really kind of comes down to aesthetic. And if you don't like that, then that's fine. Hopefully you can find success elsewhere. I don't typically overblow the value of an account, especially there's a difference between the Webull and the First Trade and the M1s of the world and the Fidelity, TD Ameritrade, Merrill Edge, those types of platforms. There's drawbacks to both. Okay, don't think for a second that the major brokerage houses, they're still providing you the same Apple stock when you say buy. So don't overblow it, man. But certainly, I love that level of of scrutiny. Constructive criticism is fantastic, man. And I love to hear those comments. Betterment looks really, really good to me for that certain investor that wants that pillar of passive and they want it perfect. That's what it is. It's a perfectly allocated portfolio. Now, if you lie on your questionnaire and you tell them you're a certain investor that you're not, then the alignment is going to be off, right? The Robo-advisor is going to align you with a product that does not suit your tolerance and your long-term financial goals, right? So that could be the only way that you could really screw it up, I think. But that's kind of on you at that point. Again, we can only show you the path, and it's kind of up to you to walk it. But I think, at the very least, we're fostering a dialogue on a YouTube channel like this, where people understand their options. So good stuff, man. I appreciate that comment. Thank you, Nick. It's good to see you in the group here, man. Target fund dates, auto balance for you, and glide toward more conservative allocations as you age. Correct. That is correct. And that's kind of, I have that option. I don't exercise that. I just stay invested in the S&P. I'm satisfied with being diversified across the market, and I'll take the appreciations with the my risk tolerance is fine to do just that. So I don't do life cycle funds, even though I'm a big fan of them for certain people, as long as the expense in that management is acceptable. Betterment is. Most 401ks are not. Most 401k programs are very expensive, guys. You got to understand that. And for most of you guys, you don't have a choice. It's whoever the employer signs up with to provide that service to you as an employee. And that's kind of what you're stuck with. Some are really good, others not so good. Okay. So yeah, I really appreciate you guys' your comments. M1 offers single stocks, Betterment doesn't. That's correct, Ernesto. That is correct. I just recently transferred my portfolio from Merrill Edge to First Trade. However, my partial shares were not transferred and were sold off by Merrill Edge in cash. How can I transfer? I heard it takes a year. That's interesting. I don't know. They should be able to cut you a check, actually, if you just give them a call. I've never heard of that situation. That's interesting. I've just closed down a little account. I got $3 in there, and it's still there too. So we'll see what happens to that. You can set up a target date fund at Vanguard for nearly free that accomplishes basically what Betterment does. How can you recommend Betterment? Oh, that's interesting. I don't know much about Vanguard. Don't know about their target date funds. I don't know. That's interesting. I mean, I can certainly look into it, but it's not for everybody. I've had a lot of people who have hit me up on Vanguard and say that they're actually moving away from them. So I don't know how those funds perform either. It'd be interesting to see how they're working on those target date funds. A little bit different than Betterment in that Betterment aligns, more with your risk tolerance as opposed to the target dates adjusting over time based on, certain age milestones that you reach and becoming more safe over time. So interesting stuff. So I think there's probably going to be some people who potentially disagree with it, but that's fine. I mean, ultimately, at the end of the day, the choice will be yours whether or not you want to participate in that solution or not. I, for one, would but can't. So that's just my own personal twist on providing the opportunity out there. And I would accept nothing more than you guys just understanding that it is just that. It's an option, that of which is up to you to make the decision whether or not you want to exercise or not. We've been going about an hour and 24. Had a great live stream tonight. We'll try to get to the rest of these questions here. I'm almost done, and then finish out the latter two columns here in the discussion board as well. So I'm a thing of setting up a Roth for my wife on M1, but only use one of their target date pies. Fair enough. Nick, it's $4.99 and $5. Good stuff. I've had very bad experience with first trade. Okay, and why is that? What is the way? You got to give some reason. I got to hear you out, man, for sure. Certainly when you offer solutions for people, there's going to be, different opinions as to why they like it or why they don't. But I'm really more interested in, in providing that direct access to the stock market free of charge. So, there's very few out there that do just that. So, yeah, Billy's hitting you up, and certainly throw those out there because I want to know good and the bad. I don't really overemphasize. Here it is. I wrote a Google review about them. I'd like to read that. Throw it in the Facebook group if you're part of the group. I've got Gotham in the group here talking about it, and Yahoo Finance to monitor watch list all day. Yep, good stuff. Ran a 50K on a Betterment account, and during the month of December, you can see how these volatile a passive account such as Betterment is, and that's really interesting. So that's why if it were me, I would have my passive pillar with them. I really would. I'm going to tell you, I looked at my passive pillar just like you looked at your account during the volatility, and those are the very counterbalances that you put in place for that very reason, right? I mean, I had people hitting me up and they're like, your portfolio is going to nothing and you should sell everything now. Well, okay, again, certain things I don't do for people. I don't put my hands in your cookie jar very often. I don't say, hey, because you have this, it's wrong, or because I have this, you're wrong and you need to do it my way. I typically don't see any value in that. I do, however, find value in talking about solutions. And here's the thing. Betterment exists, okay? And whether or not you want to gain awareness from me, right, because I've mentioned it, or you want to throw tomatoes at me because I've become an affiliate with them, or you want to not provide me an affiliate compensation and go with them anyway, right? They're all options, right? And that's the beauty of investing. And if you're unhappy with a certain platform, I've had other people come back to me and tell me, they're happy with it or they're not happy with it. Same thing with Merrill Edge, Fidelity. I've had some stories about M1, right? So each of them are kind of working through how it is they're going to win over their customers. So, I wish there was a perfect account out there. I really do. But, seemingly everybody's going to have their opinions. And I think it's very healthy. I encourage that discussion because it's going to be up to us as a community to be critical on these platforms and demand more, quite frankly, because if you don't think for a second that the YouTube or the social media isn't a powerful movement, you've got another thing coming, okay? This is very, very powerful, and it's attracting a lot of folks that are not only 20s, but in their 50s, 60s as well, coming on looking for options. And at the end of the day, I'm going to be the first to tell you, I'm not providing you guidance, okay? I'm providing you an opinion, all right? I'm very, very transparent with how I deploy my strategy and how it's worked for me, okay? So some of what I'm doing works, okay? I'm sorry. If I had nothing, I wouldn't have a financial channel and I wouldn't come on YouTube and talk about things that I feel like work, okay? I don't have all the answers, but there are certain strategies and things you can deploy that actually work. And I tell you what, a lot of the success for me, I can identify, but I would have had way more success had I just avoided some of the mistakes that I've made. And a lot of the mistakes that I've made have had everything to do with fees. All right. So you're going to have to give me more as to why it's the worst thing in the world since sliced bread, because they do in fact offer, free opportunity to buy stock. Now, if you bought the stock and you lost money or whatever, and didn't have the patience to wait it out, didn't have the tolerance, whatever it may be, right? Then we can reassess that. But certainly looking forward to taking a look at that as it's offered. Absolutely, I'm all about that. So, Ernest, thank you. I didn't know how the portfolio would have performed in that particular environment, but it's pretty cool validation to hear. That's exactly what it's meant to do, because it's built and exposed in a way that gives you that perfect balance. That's what it's built for. All right. Chase, you can invest 100 free trades and $2.99 each thereafter. That could be an option for you. I have had some folks come into the Facebook group. There was an article that was posted in there about a customer that was extremely irritated with that very program, You Invest. So just, it's great that we're pushing this out there, man. I want you guys to just throw it out there, man, because education is key with regard to searching out our options to the stock market. With Chase, You Invest, and you have Sapphire checking account, we do get free unlimited trades. Cool stuff. I don't think that was the problem. I think the free trades is actually a positive. I think it was more so the monthly Roth IRA fee, if I'm remembering correctly. And I would encourage you to look at your statement. So they're probably taking money from you without you know it. That'll really make you happy. So just these little things, man. These large financial institutions, man, they do everything they can do to piecemeal us little folks away while we're trying to do the right thing and get ahead. And there's no excuse for it. There really isn't. I'll get to the end of these questions. Toward the end of the live feed, I got 15 more minutes. Been very, very successful. Thank you for your time this evening. We'll get into the experience part. These are some of the things that I just kind of brainstorm a little bit to throw up there as far as things that you may need a little bit more work on. And they're not disqualifiers to your entry into the stock market. It's not one of those things to look at and say, wow, it's so volatile right now, I can't get involved. Furthermore, volatility is one of those things that you can't control, okay? You can't. So what I mean by having the experience is if you are invested in the stock market, it takes a little bit of experience to understand and put your risk tolerance to the test, okay? That's all it means. And I very rarely meet folks. I do meet them. They are out there that are young and can get invested. They can get exposed. They can get, by all matrix, overexposed as far as I'm concerned, and still deal with the volatility. But for the most part, it's pretty difficult to get involved in the stock market, especially if you've become over-levered a little bit and watch your money go down, all right? This is something that you have to kind of evolve with your tolerance over time a little bit. The allocation piece is tough, all right? Building a perfect portfolio. Again, somebody come on and said, why do you have bonds in your portfolio? Well, the general rule of thumb is a basic general portfolio, even as an aggressive investor, should have X number of percent of allocation, okay? And it was not so much conforming to a model for me. It was just my comfort in wanting to put some cash that I had on the side to work in a fixed equities portfolio. That's all. It was just my desire to do so. Did it move more in favor of matching proper allocation? Yes, it did. I used it for reference, as a matter of fact. But the allocation is one of those things that really does take some experience. And that's one of those things that the Betterment can kind of satisfy that option right there. The risk tolerance is a little bit easier, a little more fun exercise, honestly. This is one of those things you can get dead wrong, honestly. But for you to hit the risk tolerance on the head and identify yourself as a moderate, conservative, or aggressive investor, I always use a 1 through 10 scale just to make it even more easier, because the moderate, conservative, etc., conservative, aggressive, it gets kind of confusing. And then people are like, I don't even know what I am, But it becomes a little more difficult when you're trying to self-assess a risk tolerance without experience. And experience is just going to allow you to fine-tune your risk tolerance over time, all right? And this is something we talk about all the time, but it's not something that you can kind of look at and just hit on the head right away. Typically, people get this kind of wrong, and most of the time I see them overestimating their risk tolerance to the stock market. I'm a 7. Well, you're actually a 4 or a 5, right? Or you have the potential of being a 7, but right now you're a 5, okay? Just to give you an idea, you guys know, complete transparency in my portfolio, I'm a 7. That's just what I am. I'm dead locked in, a 7, you know? So this is a little bit tougher. It takes a little more time. Awareness is one of those things, certainly, that does take experience, but I think with the right level of motivation, you can actually supplement that. So I've got a green asterisk by this, because this is something that if you guys are tuning into a live stream every Friday, you're tuning into the videos, maybe myself, maybe other channel creators, striking up the dialogue, right? Then you're improving your awareness to the stock market. Doesn't mean you have to jump on these things that we talk about, these aspects. As a matter of fact, that's the last thing any creator wants for you, okay? Me specifically. I'm not going to talk about other creators, but me specifically, that's the last thing I want you to do, is just go jump on a particular solution, especially a product that I offer, you know, in way of a stock pick or something. That's not in anybody's best interest. What is gaining an awareness to what people are talking about with regard to products, with regard to buckets, what's available, what the expenses, what the implications of such, what the analytics are available on those platforms. Very, very important, right? And it's all to gain awareness on the stock market, okay? Experience with analysis, both technical and fundamental, very difficult. I understand if you're looking at a chart for the first time, it can really, really be consuming, okay? It can be tough. It can be learned over time. Do I think it's a necessary ingredient to success on the stock market? Nope. Nope. And I get people that hit me all the time, and they're like, Ryan, I want to know what you look at for your analysis on stock. And to be honest with you, I look at a lot of different things, none of which, there's not one single piece of, if I'm looking at a 52-week range, for example, seeing a chart to where a stock is on that particular range, I identify certain support levels, etc. But I'm not buying a stock based solely on that. All right. I'm going to read the analyst reports. I'm one of the few guys that talks about the importance of reading about a stock, what it is they do, making sure that you're interested in the business. Maybe there's a niche that they offer. Why do I invest in Marathon Petroleum? I can tell you right now, it's because of LNG. That's why, right? So kind of understand why it is you're investing in a certain stock before you do it. And it's the analysis piece that really does take time. If there's anything on this board at all that I would consider you a master of the stock market, is if you can do fundamental, definitely technical analysis. If you can do technicals, you're a master of the stock market in that particular juncture. There are people that just study this very art on the technical side. All right. Fundamental, a little bit easier as far as I'm concerned, looking at the company's financials, looking at the balance sheet, everything that's publicly disclosed. So you don't have to pay somebody like me to get a free document off of the New York Stock Exchange and regurgitate that to you. You can go on and you can find that information for yourself, but it does take a trained eye to get that stuff down. Goals, that's another one. Financial goals for your future, identifying those takes a little help, takes a little experience. I find most of the time that financial goals are done up and they're not realistic, you know, and I think this right here is one of those opportunities that a lot of people could use some help on, to say, what is your age? What do you want out of your money? What type of performance would you want out of your money, right? All very fair questions, and it's part of the financial analysis that you really should get, that we touch on the Independent Investor channel, just to probe thought. But as far as taking action on, that really needs to be as the result of an established relationship from a broker and a client, right? And then we've already talked about products. Products is another one that needs experience as well. You can have the perfect portfolio modeled for you, but at the end of the day, you're going to have to add a product to it, whether it be a VV or a VOO or a VTI or, you know, whatever, a VB or a V, you guys understand the point there, or a VO. Okay, there's thousands of products out there. Which one do you choose? And it's through the awareness that you can actually kind of know what products to add as we start to identify this allocation piece. So you can understand what a perfect portfolio looks like in your allocation, but if you don't understand anything about the products that are supplementing this allocation, then you're going to be kind of lost, and you really just need to be at least aware of what you're holding inside of your accounts. And then we've already talked about the rebalance and the tax loss. But like I mentioned, the last over here, this is really where a lot of the benefit of the channel. When I talk about awareness, I talk about the tools in your tool bag all the time, and we've really belingered the point of the account. And certainly, I haven't had any tomatoes thrown at me yet, so that's really nice. I really appreciate that. Again, I do deploy you guys in exercising free will and what are the decisions that you make, certainly. We pose those options as just that, as options, and that's where the account piece comes in. And if you heard it before you came onto the Independent Investor channel about the importance of the designation over the account being self-directed as opposed to managed, therein lies the value, okay? I've given you one of the best gifts in the financial institution that a lot of people won't give you because they either don't know about it or they, have never heard it, right? So very, very important to understand the account, yes, to an extent. Again, if you're turned off of an account for whatever reason, don't use them. Find something else. I can tell you what I use, right? I'm very happy. They suit my needs. It doesn't mean that it's going to suit everybody's needs, all right? So make your own decisions as far as that goes. The apps, down in the description of this live stream, I've provided those 3 apps. The one I actually really liked was PowerPay. I liked that for consolidating debt. It allowed you, and it does have a mobile app. I recommend you download that. Go in there, and it allows you to put your different debts in there, and it shows you how much you would pay over time, and then how much you would pay if you exercise their schedule, added a little more money to the payment, etc., rolled that payment into the new payment. It's a really cool exercise to help you guys if you're carrying a little bit of credit card debt, for example, auto loans, etc., things like that that you want to look at on the screen and actually track and put together a program and a plan for yourself. It's good. It's really good. YouTube, obviously, without saying, I think we do a pretty good job amongst our small community. The community's growing, of just providing, if nothing else, awareness. Honestly, I've had a lot of people, tune in and say, hey, man, it's just I tune in, I watch it. I may not deploy anything, right? But at least it's strengthening that awareness piece, right? The budget is a tool, obviously, my favorite word for you guys to identify your expenditures. And if you've actually worked through a financial worksheet, very interesting. There are applications out there. I know Mint is one of them that I've heard is very, very good. So I deploy you guys, man. If you're looking for some assistance and guidance in really putting your numbers to work for yourself and putting them in front of yourself, you can make judgments on your budget. Mint will help you with that. All right. So if you're young and you prefer an application to use, that's a good resource for you. Access to the market, that's a big one. Awareness through information, but access through your platform is huge. All right. We've moved into a new era of access, and it's for you to enjoy. And that's why I kind of laugh a little bit when I see some of these criticisms of some of these new platforms. I got to tell you, the industry has evolved so much over the years that you guys would have really had a field day if you knew what we put up with when I started investing, man. And that's what I really can't stress enough. Don't overthink it, all right? Get what you want out of it. Criticize as you will, but certainly at the end of the day, what you're looking for is access, okay? And that your level of access has never been so good. And finally, free trades, and really free trades as far as fee reduction as well. That's very, very important. Managed account is going to charge you for some of these services over here. They found a way to take, and I've done videos on this. They'll charge you for a dividend reinvestment program. And I think that's actually one of the things they're doing in the Chase You Invest program. So you got to look into that, man. You got to look at your statement and say, what are they actually charging me for? Because they'll just charge you for whatever they want, as long as it's been disclosed to you in the disclosure form that you didn't read. Nobody reads it, you know. Got to be very careful. And then, of course, info is one of the tools in the rule of 72. But I'm going to try to finish out some of these questions here. The problem I saw with Betterment was it was fees on top of fees. They invest in Vanguard and iShare ETF with expenses. The Betterment took a fee on top of that. That's correct. And the ETFs are very super low. And I think the benefit that I saw was on the beginning service piece for those people that want to be an active investor, like me, partially, but I do see the value in passive investing. A ton of people come to the channel and they're like, Ryan, again, I hear you, man, but I need that consultation. I need that assurance that if I'm going to give a piece of information about myself, that it's going to be received and it's going to be deployed from a fiduciary perspective. I'm not going to be sold a product from a salesman perspective. And that really intrigued me, and that it's the era that we're moving away from. And a lot of people demand that service. A lot of people need that service, right? So if it's not for you, again, it's not for you, right? But I think on the tax loss harvesting portion and the portfolio rebalancing, right, there was some statistics that I read that show that you can get a 2% benefit by doing that in the account. So yeah, there's a little bit of expense, but you can't look at it so singularly that the benefits of the perfect portfolio makeup that they talk about isn't assisting with and allowing some sort of offset to some of those costs. And some people don't mind. They just don't mind. They would rather have the service and pay as low a fee on the service. Now, the fees on top of fees is the ETF fee with the 0.5 up to 100, excuse me, 0.25 up to 100 grand. And then it gets interesting. But here's the thing. From Betterment's perspective, if they have not won your business up to 100 grand, then they haven't done their job, okay? If you're unhappy with them and you've invested your account passively up to 100,000 and you're unhappy with them, move. Very simple, right? Or do your passive pillar, do your active. And I think you guys are kind of underestimating how difficult it is to make it on your own, to be a stock picker or a stock trader, all right? Most people can't do that. Most people really want to attempt to build a nice quality value portfolio, which is me. It's not perfect. You know, I've taken a few lemons into a downturn, that's for sure. But I still believe in my product. I manufacture a lot of growth in my portfolio. I'm long on a lot of positions. I have a lot of dividend income from my portfolio, but I do have the passive as well. Whereas a lot of you guys that tune into the channel, you're like, okay, great, sounds wonderful. I'll start a self-directed account. I'll get going, and I don't have that passive base. So you have to kind of build both into the same portfolio, right? So good stuff. Thank you for that. I appreciate that comment. Chase sounds like a damn good deal. Nice. Draw my own funds. That's what I left. Vanguard, good. What it is, you can show people how to make a simple Vanguard for no fees. Okay, good. Almost getting done here, guys. I'd like to keep it under 2 hours, honestly, but I'm looking for some of these questions of me. Am I the only one who sees a lady's face in the back of that bull? That's funny. Yeah, I don't know. Is there a lady's face in the back of the bull? It could be. I don't know. Let me cruise on here. Stop, man. Check on the NPR article. Nice, great. I just want to make sure I made my way all the way through here, man. I got Gmail in here, says he likes M1. My budget sheet is called Living Expenses. Awesome. So that's another one of those budgeting applications that you guys have got there. So if you've made your way, most of you guys have hit the thumbs up for me if you appreciated this. I really appreciate the support this evening, man. An hour and 50 minutes. Again, guys, if nothing else, man, I do this on my own accord for you guys to provide transparency, honestly, provide real solutions. Like it, love it, leave it, don't use it. But they are options. And that's the beauty of it, man. I really like it. I have a Robinhood M1 Fidelity stockpile at Jazz Wealth. You're probably paying a few bits there, Gmail, certainly. I haven't looked at the fee structure, nor do I want to. I'll probably throw the couch through the TV, but that's probably not something I would do. Ernesto, should I name it something else? Ryan, you turned me on to smart investing. Glad to do so. You're well on your way, no doubt about it. What did the first quarter really start? Is it Monday? Yeah, it's Monday. I joined Alliance. We cruise down here, guys. Awesome, good. But they limit it only to U.S. citizens. That's interesting, too. Yeah, that's interesting. These questions just keep coming, guys. I want to make sure I get all the way to the end, so bear with me. I just need a little time to understand the strategy, and I'm going to excel in this, too. Mr. Finance Guru, thank you. You absolutely will. Give it a little chance, man. I mentioned the one month, you know, take your time and don't ever think you got the thing licked, because you're going to evolve. It's going to be more of a lifestyle for you getting into personal finance and investing. Certainly, man, you'll never have all the answers. Never. Most of the folks that have been with me for quite some time know that I'm pretty humble, and this is a topic. The stock market can be humbling. This is a topic that can be humbling, and I never profess to know it all. As a matter of fact, I take a little different approach on my channel, and I tend to focus on the betterment of the folks who join the message. No pun intended. The empowerment message. If you guys are improving your financial posture, I'm all about it. At the end of the day, that's what I'm all about. So. To move to reserve, I would have to sell my stocks, or they can move the actual stocks. It's a like-in-kind transfer. They can do a like-in-kind transfer. It's very simple. And you just declare what holdings you have, and they can move the stock right over. It's very, very simple. M1 is just meth, in my opinion. Jesus Christ. Leave it to Michael Raver, man, to bring it home. I can't stop on this. You're receiving brochures within the initial transfer. Most platform, you can initiate it online by uploading a statement of your brochure. Yep. Use charge. The transfer will happen in kind if you wish to. Thank you for that. That is true. Gotham, appreciate your input there, man. That's for sure. Having too many brokerages can be a problem, or maybe not sure. It can be kind of confusing for visibility's sake, not having. I like to have it visible on the same platform, but at the same time, I think it's more important to have your pillars the way that you like it. The brokerage house that I read off to you, the 3 accounts, those were 2 Roths and 1 taxable account that I offered to you guys earlier. The other account obviously is on another platform, and they're linked in, so I can at least see them. I can't really maneuver anything. It's just for visibility, and it shows me the figure on there on my screen. So I don't think it's a big deal. I think it's more just a convenience thing, to be honest. But it's really kind of come down to personal preference. I've got Sue in the line here, very, very bottom. I finally got down to the group here. What a group of comments, man. Very much appreciate you. You can transfer in kind most of the time if the receiving institution carries those stocks, and most of the time they do. If it's a major brokerage, major trading, New York Stock Exchange, NASDAQ, etc. So thank you for that, Sue. Appreciate it. I bought some CVS this week, and I think I'll buy BMY next payday. Awesome. Good luck on that. Good stuff. Got Aloha State of Mind in here. Wife's Roth holds Apple, Alibaba, Google, Intel, J&J. That's a beast of a portfolio. That's what I'm talking about. Don't sell based on the market, sell based on the stock itself. Smart. Thank you, John. Appreciate you popping in here and offering your comment. I wish I could have got to that earlier. I would have added to that. But listen, guys, I'm going to kind of wrap this thing up. Certainly, another great live stream. I'll end on that one, Sam. Thank you. This is going to be the style. Certainly, I want to be as engaging as I can with the audience. You guys don't make your way in here to hear me rant for 2 hours. I want it to be engaging, and I think we've done that. offer up your opinions. I love it, man. It's really great. Anybody who's making an informed decision, look at how much information is plugged into this script right here. And somebody who's reviewing that script can really look over this and be like, wow, this is really cool. We love the rants. Nice. I love it, man. It's a little bit of release for me too, man. Makes me a better investor. When you can teach this stuff, it makes you a better investor. And again, if there's one person out there that benefits from the message, which I think it's a lot of people. I know this because there's some reciprocation on the channel and appreciation for me at least helping foster the dialogue on the topic. So guys, with that, I will end. Thank you so much for everybody that's made their way into the live stream tonight. Have a great rest of the weekend. We will catch you next Friday. Thank you so much.